Crypto markets remain weak, especially altcoins. BTC dominance rises with nerves around crypto regulation due out today. Short-term crypto vols catch a bid as markets chop around ahead of major macro catalysts. All this and more in this week's Crypto Insight. Okay, so crypto this week. Crypto space remains heavy, heavier than most risk assets right now still. So every time we get a little hope of a rally, think, okay, finally crypto's having to catch up to equities. Within a day or two, it gets faded, right? That seems to be the dynamic we're in right now. It doesn't take a lot to knock the steam out of crypto right now. Bitcoin dominance continues to rise. It's now back to October 2021 levels. And also, the alts have just got no bid at the moment, right? No bid, and money continues to flow out of DeFi and DeFi protocols, basically. My scenario for Bitcoin remains unchanged. I'm still looking to sell any strength into around 33K for a break below 28K, which would be the catalyst to slide towards 20K. And that's kind of my potential low target area for the summer, right? That's not to say we can't overshoot that area. We may well do, as people, get scared on the whole MicroStrategy idea that they might be needing to puke some. And we have already seen miners selling. You can see the chart there on the right from Glassnode, shows you that net miner position changes are red, which means miners are actually finally selling. We saw miners selling, in some of the previous episodes of weakness, but they managed to kind of hold much better last year than normal because they got a lot of funding. They managed to tap the debt markets basically, right, and raise capital that way rather than having to launch all the Bitcoin that they were generating to then use that for operating expenses. Now it seems though that there's margin compression that's coming from the price of Bitcoin going down is impacting them. And then you had Riot Blockchain last week kind of coming out and pretty much saying that. And kind of that's why the market's going to be a little bit nervous there on miners and miners are selling off. Yeah. Then if we have a look at what ETH's been up to, it doesn't look great, pretty ugly picture, continues to hug that 1700 area of support. Looks a bit ominous because it doesn't really, it bounces, but not for long and then goes and retests it. So I think a downside break is feeling pretty inevitable of that 1700. You look at the ETH Bitcoin cross, after breaking below that support level at 0.064, it's now headed lower. It's kind of approaching not too far away from that 0.05 area that I mentioned. Sorry, 0.055. That's kind of the first area of support. So, that's kind of the base case now. We're probably headed there. I mean, we've got this Ropsten testnet merge, okay, tomorrow, and we've got another developer call on Friday. So obviously you're getting more and more of this news flow around the merge and whether the merge is actually going to be a success or delayed or whatever. So that might provide clues as to the likelihood of delays in the merge because that's, due in August. But if this Ropsten thing goes swimmingly, then maybe the market prices it for August. If it doesn't, then we could stick 2 months delay on that minimum, maybe. I don't think I think the idea is it can't get delayed too much because of some of the conditions that have been laid out there, but something worth watching. I think it will keep the price action in ETH quite choppy, basically. and the price action in ETH in general just shows that investors are not overly optimistic on the merge and the news flow around the merge, right? So I'll kind of, watch out. I mean, I think we have got some pressure coming from treasuries in the DeFi space that have been holding Ethereum and stuff, and they've been dumping it. So maybe that's weighing on it a bit as well. So you kind of just it's a combination of all those factors, basically. On that point, we're due to get some legislation out today, actually, around sort of how the US want to integrate crypto into the financial system, right? And apparently that legislation has been kind of written up and designed by a bunch of Bitcoin maxis, right? And Michael Saylor's on the panel there, right? So it's kind of the idea being that they're going to call anything that's not Bitcoin a security, and they're going to call Bitcoin a commodity. And that's the way they're going to have legislate and have regulations around it. Okay. If that happens, that's not great for DeFi, right? So, that's one of the reasons why DeFi is underperforming so much. Really, the weakest altcoin this week has been Solana, down 17%. It had another 4-hour outage on the 1st of June. So that's kind of the catalyst really there for the underperformance. That makes it 12 outages this year. So it's not doing great on that front. It reached an all-time high in November 2021 of 260. It's now down 80% from there, maybe even a touch more. Whilst it's got the lowest transaction fees that's what's made it popular in the NFT community. These outages need to be addressed if we're really going to kind of compete with ETH long term as an L1, I believe, right? So I don't think Solana is going to die. I think it will. Obviously, they know what they need to do, and there's enough people sort of invested in the space to kind of address the issues. So I think it probably provides a long-term buying opportunity. Wouldn't be surprised if it gets as low as 20 though, right? Because I don't think the crypto sell-off is done yet. I think if Bitcoin's got like another 40% downside from here, I mean, where do you think Solana's going, right? Clearly it's not going to be higher, is it? So I think there's a chance we could pick up some serious bargains in Solana down at 2025 in the summer. So I'd be looking to do that. The way I'm doing it, that is selling little scraps of puts all the way down. And every time they go into money, I'm effectively picking up another scrap of Solana at the strike price, right? So that's how I'm doing it. And I'm happy to kind of slowly build into that Solana position over the summer into that weakness, right? That's kind of how I'm using that relatively expensive vol, or at least high vol, right? We'll talk a bit later about whether Solana vol is expensive or not when we do the vol analysis, but it's certainly high vol, and I'm using that high vol to my advantage by doing those put underwrite strategies. Yeah. Okay, we can hand over to Aaron now for Glassnode.
So I hope everyone's having a good week since we spoke to you last. And so for on-chain this week, it looks like Glassnode's kind of basic theme, or the takeaways for me, was that they are coming up with some decent evidence that these extended bear markets happens in 2 phases. The first phase, or phase A, kind of comes off those all-time highs where you get some panic selling, and then you get a little bit of consolidation, and eventually you get that second phase where a bottom forms and you get that final capitulation event before things recover and we get that next bull market. So one of the first charts they use to kind of show that is that first chart in the top left, showing the Mayer multiple. And so real basic, the Mayer multiple is just the ratio between spot price and the 200-day moving average. And so what you can kind of see here is it might be a little small, but when you can look closer, there's kind of these little red circles, one with an A, one with a B, and it kind of shows historically throughout the bear markets, you get that A kind of move where it falls below 0.8 on the Mayer multiple, and then it recovers a little bit, and then eventually you get a bigger capitulation where it falls below 0.8, goes as low as 0.6, and that usually that B move down is what is needed to be seen before we get above those Mayer multiples and we get that next bull run. You kind of see it has consistently happened, and right now we are what Glassnode would characterize as that B phase of falling below 0.8 and being right around that 0.6. Moving on from there, the chart in the top right, that's the realized price model. I think we've spoken about it before, kind of like the Mayer multiple. It's used to kind of analyze whether we are in a value zone, a time where prices are reaching some lows. And with the realized price model, you could see that very rarely does it fall down to that line where it's showing the realized price, which is just the cost basis of all coins the last time they moved on chain. Movement off chain, obviously Glassnode has no way of knowing. And so right now we're sitting with that realized price right around 24K at 23,600. And it's probably worth noting, Glassnode says in all of Bitcoin's history, the times where it falls below that realized price, it's really only been about 15% of the history of Bitcoin's price has there been closing days below that. And then going back to the Mayer multiple, only about 8% of the time in Bitcoin's history has the price fallen and closed below that 0.8 range. Moving on from there, in the bottom left, we're looking at the cumulative realized loss, which is basically just the ratio of realized loss to the realized market cap. Obviously, as you're seeing losses, the overall value of Bitcoin's market cap is going down. And this is showing the ratio of that. Again, pretty significant because it's showing historically there being 2 phases. You get that big spike up where in the past it's gotten as high as 25%. We're seeing now it's kind of subdued, but that's not too surprising with how much the market's grown and the value, but harder to see bigger spikes. But that pattern looks to be reoccurring, where you have that big spike A, a smaller spike in B, and then eventually if we can fall down to that 5% realized cap, that usually seems to be what we need to see to move into that next kind of bull run, bull cycle. And then lastly, the chart that they showed in the bottom right here, also showing signs of being two-phased, is the Puell multiple. That has more to do with miners and miners' earnings, kind of something that Imran alluded to a little bit earlier. And basically the Puell multiple is the ratio between the value of the block reward, right? When a miner submits they solve that big math problem to submit a block to the blockchain, they get a reward in Bitcoin. And so this is looking at the value of that Bitcoin reward compared to the 365-day moving average of that value. And basically showing it usually happens in two phases again when we're in a bear market. First, you'll see that Puell multiple fall into that yellow orange area where it gets below 1 down to 0.6. And then eventually we have a bigger capitulation puke down where we get down to 0.5 in that kind of red area. And that's usually what we need to see in terms of miners' earnings to get out of a bear market and move on to the next. It's probably worth noting right now when we're in that 0.5 below 1 area, that means miners are making 40% less than they were about a year ago. So from there, moving on to Will Clemente and his on-chain analysis this week. First things first, the first chart in the top left, not an on-chain, but an interesting chart for us, basically showing the Bitcoin and NASDAQ correlation with that blue oscillator down there, basically just showing after prolonged, really historical high levels of correlation, we finally kind of deviated from that, maybe not to Bitcoin enthusiasts or crypto enthusiasts liking, as it kind of price moved down while equities moved up. Moving on from there in the top right, something that Imran also noted on earlier was the Bitcoin dominance. Bitcoin dominance continues to rise. Right now, Bitcoin's accounting for 40% of all crypto's market cap, which we spoke about a few weeks ago. This is usually kind of a healthy sign showing people going further in on the risk curve, away from alts, NFTs, things of that nature, parking money in what they see as being something a little more safe, being Bitcoin, which usually needs to happen before that money can once again outflow into the speculative stuff. In the bottom left, we're looking at the on-chain cost basis, which is basically just the ratio between the short-term holders cost basis and the long-term holders cost basis. You're a short-term holder for anything under a year, long-term holder for anything over a year. And basically, so the light blue line and the red line at the top are showing the individual prices, short-term versus long-term. And then you have the ratio represented by that dark blue line. And basically, Clemente's big takeaway is that when that ratio gets under 1-to-1, which is represented by that light green line at the bottom, it's what he characterizes as generational buying opportunities. And you can see it seems like we're trending down towards that area. And then to wrap up on-chain for this week, we're looking once again at the geographic premiums we've looked at before, specifically at the Asia premium, which Will Clemente has pointed out that it seems that Asian-based market participants over the last 2 years, looking at trade books and on-chain and things of that nature, they've seemed to have dominated the space. And right now they are buying at a pretty sizable clip. And that is going to wrap it up for this week's on-chain.
Okay, so if we look at the vol side of things, looking at realized. So, most of last week we had implieds and realized drifting lower. ETH was trading a bit cheaper in terms of implied realized spread, as it often does, because it has a bit more supply in that front end gamma side of things. And so generally offers better value gamma ETH, right? Because there's more sellers of it around, despite the fact that it moves more. We did see a spike in short-term implieds after the weekend with the kind of up 5% and then down 5% sort of today. And that's kind of waking up the market a bit. And so implieds did spike, but they're already fading, right? They don't hang up there. They don't hang about up there for very long. I still prefer owning ETH gamma to Bitcoin because of this potential catalyst with the whole testnet merge thing, and just because it's moving more generally, right? It tends to be a bit more choppy. Its range is just a bit wider, yeah. So that's kind of the realized side of things. If we then look at term structure. So, the low points in the term structure, you can see it's neither contango nor backwardation, right? There, you've got that backwardation in the front and then you've got contango to the back. So the low point is kind of July right now. And the reason really is just because it would be in contango if people were willing to sell gamma, but there seems to be a bit of a short-term bid for gamma right now. Okay, partly because of what, you know, we are winging around a bit, but also because you've got all these catalysts, these macro catalysts on the horizon, right? So within the June expiries, you've got FOMC, inflation, more inflation data. You've obviously got expiries in, I mean, not that equity expiries are that meaningful for it, but in general, the idea is that there's enough macro sort of data prints out there that the market's a bit nervous to sell gamma right now, basically, right? That's what we seem to be seeing anyway in crypto. If you look at long end vol, it continues to trade firmer in ETH because of that kind of long dated spread buying flow that we've mentioned in previous weeks. So that's still kind of grinding its way up a little bit, whereas not the same thing happening in Bitcoin. And then if you look at what weekly vols were kind of doing intra-week before they kind of ended up where they are now, you got that overshoot in weeklies that you typically get into the back end of the week, into Thursday, Friday, with the DOV auctions. That tends to kind of be the bottom in vol short term, and then it kind of has its bounce, right? So again, for the people looking to pick up cheap gamma because they think the market is whipping around enough that they can trade it, you don't want to be buying that gamma until kind of Friday when the DOVs are done selling, basically, right? So that's kind of, that seems to be a pattern that's pretty consistent, right, in terms of the weekly vol price action. If we then look over at skew, yeah, we did see some skew sellers emerge this week as the downside move having a little bit less bite, right? We are weak, but we're not breaking those downside levels that we've seen before, which is 1700 in ETH, for example, right? So whilst ETH put skew was super bid the week before on a relative basis, it was still at around 15 vols. It's come into about 10 vols now, which is much more in line with Bitcoin skew, right? So ETH skew not really holding that premium because we couldn't break the lows yet, basically. Longer term skew, on the other hand, still remains flatter in ETH because there's more call demand. Simple as that, right? No one really gives a shit about long-term calls in Bitcoin, but they do care in ETH because it's got the story, right? And that hasn't changed. Other than that, no real major signal in the skew moves this week. One thing that's quite interesting is Solana. So we talked about Solana vol being high, right? So the question is, does high vol mean expensive vol? Right? And this is something you often see in volatility markets, right? That the less liquid, higher vol instruments are often the best value. Okay. So you've got implieds in Solana have been coming down, right? So you look at that shadow implied vol term structure, we were pretty much 120 flat. We're now down to like, good 10 vol drop in that June maturity. So you've now got 100 to 110 implied. Whereas the realized vol, as you can see, the 10-day realized on the left chart is that dotted orange yellowy line. That's still at 120. So you've basically got 10 vols discount in where you can buy Solana Gamma versus what it's realizing. And if you look at 30-day realized, that includes some of the nutty moves that we had. So realized is even higher, right? Like above 150. So I would say that, funnily enough, Solana Gamma is better value than ETH and Bitcoin, even though it's way higher in absolute terms, right? So for those who want to be actively scalping the moves in Solana, that potentially presents an opportunity, because what it's saying is that now that Solana vol has been listed onto Deribit, the marginal flows are sellers. They don't really care where the vol is. They just want the premium because they're probably like strangle sellers or overwriting like the DOVs do or whatever it is. And they're not looking at the realized vol and they're not trying to trade the realized vol. So they're happy to sell it at a bit of a discount to what it's really worth. So gamma traders can come in and take advantage of that opportunity, basically, right? So to me, that's actually, and it's the same with me, right? I'm selling downside, short dated downside in Solana. I'm doing it on Delta. I'm not doing it here, but I'm not doing it Deribit, but it's, I don't really care. I just want the premium, right? I don't care what the vol level is so much. I know it's in the hundreds. I'm thinking of it from a premium perspective. I'm happy to take that premium. I'm not trading it every day. I'm just selling it. And if it doesn't go down there, I make that premium as a profit. If it does go down there, I make a print in buying some Solana where I'm comfortable buying it. So for me, it's a totally different decision to what it would be for a market maker or a gamma trader, basically, right? So that's the kind of dislocation there between the different market participants and what they want to get out of the option, basically, right? So I just thought that was worth flagging. And then the last slide on crypto insight this week is flows. Mixed flows in a choppy market on Bitcoin. Each time the market tries to break higher, we tend to see short-dated FOMO call buyers, right? We saw a load of call and call spread buyers on that move over the weekend in the kind of 32 to 36 strike range to June in Bitcoin. As markets fade lower, we then see a bit of put buying come in, bit of hedging activity. So last week on the weakness in the market, we saw December 15K puts being bought. We saw July 30K puts and some July risk reversals. And then in terms of the vol side of things, we're tending to see, again, the DOV type stuff, right? The 10th of June, 17th of June expiries getting sold, strangles getting sold. But that gamma has been soaked up by the market this time, right? Normally that smacks that front end right back down into the 50s. But because we're getting a bit of choppiness, it's not that hard to scalp a 2.5% move out of the market every day. That vol can't really stay down in 50, 55. So that vol's kind of traded up a bit as people come in to scoop up that cheap gamma. Yeah. And then in terms of ETH flows, still seeing some short dated put flow protection, whether it's protection buying or selling, not so clear to me. Because the skews come off a bit, maybe it might be a bit of selling, a bit of opportunistic selling going on down there in the downside side of things. But, DOV related selling of at the monies. So a large chunk of 2,000 strikes in 10th of June got sold last week. And then you've got the usual upside structures in SEP, DEC and March 23 expiries. People doing those call spread type structures to try and get some of that upside exposure for the longer term move, basically, right? So no real change there on the ETH flows. All right, that's it for me this week. Any questions? Thanks for watching, guys. If you like this content, please subscribe to our channel, give the video a thumbs up, and hit the notification bell so you don't miss out on future videos. To watch the entire macro call, which includes the live Q&A and a walkthrough of all my top trades, you can sign up for a free trial to Macro Insight. If you join our exclusive trading community, you'll get access to our Telegram group, and you'll also get weekly market reports summarizing the macro call. The link is in the description to the video. And for more information, you can connect with us on socials, or you can visit our website, options-insight.com. Thanks a lot.